Welcome back to another late starting episode of the Rational Investors Daily Brief. Sorry that we started a little bit late. I was trying to escape from the dystopian environment behind me. Electricity doesn't work so well, the world has ended. So now I'm here for maybe a couple minutes. We'll see if anything goes out. We lose power. We get attacked by some kind of, evil AI virus. Who knows what could happen? My skin is changing. You can see my color. My skin is changing as I move back and forth. Anyway, hopefully you guys have had a great week. I know it's mostly Brian on. Today is Thursday for anybody watching new. Thursdays are the baby powder reports. Now, why is it called the baby powder report? That is a very long story. If you join TRI, you can ask in the members lounge. Most people know why it's called the baby powder report. It's a slightly funny, slightly short story about my beginning adventures in Thailand. Yeah, okay. Well, welcome everybody. I see we've got 12 people watching now. Feel free to ask any questions. I'm going to do my normal spiel, which is jumping through. We're going to look at the breadth on TRI, our custom indicator. Then we're going to go and look at the Forex schedule. And then we're going to look at open interest on the SPY tomorrow to see if we can pinpoint where price might end up. And then we're going to look at the S&P 500, Bitcoin, maybe the total crypto market, and maybe one or two stocks before we end the show. And then we do the after party where I will take all of your requests, any requests. And by the way, yes, I have a beard right now. I've been lazy with shaving. This is my caveman appearance. All right, 1075. Nice to see you. It's fun on the YouTube. You get to see my face that looks like it's escaped from a cave. Okay, I'm going to shrink myself so you can't look at my face as much. Go down here. Okay. Shrinking. Oh, yes. Okay, share locally on Discord. Yes. Well, apparently Discord glitched, so we're just, sharing here. Okay. So we want to turn off the dystopian background. Shrink me a little bit more. Maybe I should be like really small today. No, I'm gonna be here. I think that's small enough. Good size. You can still see me a little bit, but not too much that it's distracting. All right, I'll share on. Chris said I need to share on Discord, so let me do that really quick. There's only Cotter in here. You know what? I think to not kind of ruin the possible computer issues, maybe just Cotter if you don't mind. Maybe watch on YouTube. And we'll just have the Discord for Chris. You talk to me if there's any issues with the YouTube stream. Okay, so we'll do it that way because then we can avoid any issues and not waste any more time. Okay, great. So let's look at what's going on in the market. S&P 500 on the breadth indicator looks like pure crap, absolute disaster. There's nothing. I see nothing good here. It's basically a crash environment. I mean, last time we had something like this was back in. We didn't even have a cross down like we had here. We had a big dump, right? And let's say this moved from January 31st to February 21st. Let's look at what actually happened in that move back then. So February 2nd to February 24th. What happened there? Here's the S&P. Let's go to a daily chart. Let's get rid of my indicators for now. So February 2nd. Here's February 2nd right here, right? We topped, and then by March 10th, we bottomed. So we dropped 400 points, okay? And February, I quoted February 22nd was when we kind of started bottoming. That was after the big drop. So we dropped almost 200 points, and then we ranged a bit before we dropped another 200 points. Let's go back here. So February 21st, we crossed over. We kind of played in this zone before finally taking off again on the 24th and rallying. And then what happened with the market, right? 24th right here, we took off and then we actually rallied. So this is a possible scenario we could be looking at. The S&P is simply having a bearish bounce, and then we're going to see a reversal to the downside. We've been in this large triangle range here for quite a while. The market's really just been ranging. It looked like it was getting ready to break out. It reversed. Now it broke down within 2 days, and now we're getting a slight reversal here, and we could be looking at, some kind of move down like this to this 397 area to complete the continuation of this triangle pattern we're kind of in. Okay, let me go back to my browser here, and let's go back and look at crypto. So crypto's also been in a downtrend, although crossed over a little bit. Mixed signals from crypto, not as clear as the S&P, but not looking good at all. So that's crypto. We're going to keep an eye on that. Let's go look at Forex and see what the recent news has been. So today, we had unemployment claims come out, and they were basically around the forecast, only 5,000 difference, not a big deal. Let's see what's happening tomorrow. Anything with USD? Nothing with US. Oh, flash manufacturing PMI, flash service. Oh, this is last week. Wait a second. Why is it showing me last week? We want to see what is with this. Let me refresh this. I don't like what it's showing me here. Today, April 27th. Okay. So unemployment claims came out lower than expected. Advanced GDP. This is the big one. This was the one I think that caused the big gyration in the market. GDP expectations went from 2% to 1.1%. Yeah, that was the big one that caused the let's see. So it came in at 7:30 my time. Now let's go look at the charts and look at what happened with the market. You have to watch out for these news events, especially if you're shorting, you're trading on a lower time frame. I think it was right here, right? Yep, right here. So 7:30 would be right here. This is 8:30 because we're in Bangkok time. Right here. So dupe. Yeah, this is your liquidity hunt to the upside. Take out the highs, take out the lows, all the way. How many hours of time did it take out? It took out about 5 hours of trading time, just with that one move. Before then, it rallied, and now we took out the liquidity all up here to, in a way, in my opinion, prepare for the next downside move. Okay, let's go back to my Forex Factory here. What else is coming out? Tokyo Core CPI comes out 6:30 a.m. tomorrow for me. Let's see what else. What are we getting at night? Core PCE price index and employment costs. So PCE price index, this is probably going to be another liquidity hunting event, so be careful with that. But the more important thing is we want to look at the SPY and the options expiry tomorrow. Friday options expiries are always a big deal. So this one, it looks like max pain is 410 to 412 on S&P, which corresponds to 4100 to 4120 on the SPX. Let's go back to the chart. And where are we? 4100. So all they have to do is keep the market right in this area until next Friday to create max pain. And it wouldn't surprise me. Not one bit. I mean, I don't even know why I talk about the fundamental events sometimes, because I don't know if they matter that much. Like, for example, it just came out preliminary GDP could be 1.1% instead of 2%. A full almost 50% cut. But the market rallied today. I mean, any logical thinking person would think, okay, that's really bad, so it should drop. But it didn't. It rallied. And why did it rally? Because tomorrow options expire and max pain is at 4100. Like, if they let it stay down here, there would be too many puts that would end up in profit at 40.50, almost in profit. So better to rally to this 4100 level where puts drop off sharply and have everyone lose money. The calls already lost a bunch of money, so just sit here and everyone loses a ton. It's definitely not going to go over 4170, that's for sure. Likely close 4100, 4120. That's what we're looking at tomorrow. And then next week, let's look at what happens next week. So the markets also often change around the beginning of the month. Okay, you'll see a deviation and then a continuation of the trend. So let's look at what is going to happen next week on the 5th. Let's see what options look like. Yeah, 4150 and 405. Big wall at 4,000. That's going to be the wall for sure. But the market can move as much as it wants until you get to next Friday. So Monday to Thursday, there could be a lot of volatility. I expect it to, well, let's not say what I expect. Let's look at the chart and walk you through where I expect us to be by next Friday. Okay, let me pull this back up. TrueBit protocol. Sonic, if I have time at the end, I will check it out. But if not, I will definitely do it in the after party. We've got about 20 minutes left here. I need to talk about SPX and I need to go through Bitcoin. Okay, let's go to a daily chart here. Look at all the alerts I have on this chart. It's way too many. Why don't we start at a weekly and get rid of all these crosses I have because they're for lower time frames. Clean this up a little bit. Visibility. I don't want this on the weekly. I don't even want it on a daily. Why is it not letting me click? I want to click multiple of these, but it's not letting me. Okay, weekly, daily. Okay. Daily. Okay. So now that those are gone, let's delete this. And let's look at a monthly. Let's look at a monthly first, and we're gonna really work our way down. This is the monthly. Why are these still? These lines are still showing. So you can see on a monthly chart. I mean, what does this look like without me even cleaning anything up? What does this look like? Can anyone tell me? What are you seeing here? Anyone? What does this look like? Just the price. Inverted head and shoulders. I mean, maybe, but I'm talking about on more simplistic terms. I would say it looks like a range. It looks like the market's just ranging for literally a year. Liquidity hunting on both sides and ranging. The question is why? Well, it's because because so many people are bearish. Everybody thinks the world is going to end, but it is actually a bearish environment. The market can only do one thing, right? It can't really go up because then it would go completely against reality. But at the same time, it can't go down because too many people would profit. So it has to just stay in a range and make sure it causes the maximum amount of loss to the maximum number of people. That's the job of the market. So that's why we've been stuck in this range here where you basically short the highs and you buy the lows, which is, if you bought 3,800 every month for the past month, you would do really well, except for these 2 months. Buy 3,800, sell 4,150, 4,200. 4190, probably like 4150 would be a safe area. That's all you had to do. If you look at a monthly chart, it's that simple. Let's go to lower time frames. Now now we're looking at more serious. So now we have a triangle pattern here, right? We've had multiple like wedges created on the upside that each break down, and then the market just continues to range. Now, right now we're at the top of the range. What should we be looking for when we're at the top of the range? Should we be looking for a move higher and a breakout of the range, or should we be looking at a breakdown and a move back to the lows of the range? Which one has a higher probability? Trading is all about probabilities. By the way, I'm drinking a water with a very small amount of energy drink in it because I went to the sauna just like 3 hours ago, and then I did an Epsom salt bath because my muscles are sore from doing squats the other day. So I'm using this to keep myself awake because I'm a little bit tired. Just a little fun fact. All right, so hopefully that makes sense that there's a higher probability that we're going to move down rather than moving up, simply because we've been in a range and there's no reason for this range to break yet. I haven't seen any. There's been no event that has occurred that says, okay, there's a big change. Yeah, I agree, Matador. I also took some ZMA pills just like 30 minutes ago because I'm gonna go to bed in like an hour and a half. Keep in mind, guys, it's 11:30 here. Okay, so this is a weekly chart, right? And we're in this triangle range. Now we need to be hunting for shorts because also, here, let's go to a daily. What else happened? We had this huge run up from the bottom of March to April, an entire month of an up move. Yeah, exactly. And we had a breakdown of this parallel channel, right? You see the big break? Okay, and then we hit this is a 50 EMA, that works very well as a trending indicator. And then I have another indicator here and here. It's a custom indicator called the trend heuristic by Insilico. I think you have to pay for this, but it works really well to help keep you on the right side of the trend. So right now, until this breaks down, we're still kind of in an uptrend. However, I don't like that we're at the top of the range. So I would prefer so I'm hunting for shorts simply because we are at the top of the range and we have on our RSI a breakdown. We had a breakdown right here. This was your uptrend right here. And here's your breakdown. We had M'd out. We confirmed the M. Now, what are we doing right now? All we're doing is retesting the breakdown. So we retest right up to here. Oops, wrong thing. No, I don't want fibs. I want this. Retest and do this and then break down. That's what we're looking at. And you can look at stochastic RSI is already down at the bottom of the range. Traditionally, if stochastic RSI is like this, is a very bearish sign, especially on a daily chart. So we're not looking good. This move, in my opinion, is simply a retest of the breakdown. And it accomplishes two things. It stops anyone out that got really hyped that the market was gonna completely dump. Okay, so it stopped all those people out, liquidated them. Then on top of that, it's causing everyone that's shorted in options, they're getting wrecked right now. So their options are all going to zero, and the market makers are making a ton on the fees. And on top of that, it brings the VIX stack back down. Now, VIX is very important. I've talked about the VIX on other shows. I want to talk about natural gas, by the way, because it's making a huge breakout here on a 3-day chart. But I'm going to pull up the VIX. Get rid of this. And you can see on a daily chart, the VIX also had a deviation, right? And now it's creating the second one. So this was our first deviation. Then we want a second one to create that second W. And that second W is what's going to give us that move push higher, right? And if we're looking at it in EWT terms, Elliott wave, this would be wave 1. And then wave 2 is this pullback. And then wave 3 is going to be should be the big push higher. Look asks why you use both RSI. So I use stochastic RSI and normal RSI. Stochastic RSI is a bit more smooth and it gives clearer signals. I like to use it as just a double check. But usually when I first look at a chart, I'll simply look at the RSI here on the higher time frames. And when I get to lower time frames, I often get rid of RSI and I'd simply look at price action. I don't even look at any indicators. I only use those two as kind of confirm what I'm already seeing in price action. Because I found that, people often get too distracted by indicators, and especially on lower time frames, it's better to simply look at price action. Because indicators, especially on like an hour time frame or lower, are used by market makers to actually manipulate you and make you take the wrong trade. Like they'll drop the price to make it look like the indicator is turning in one direction. So you say you short it, and then it ends up reversing quickly and the price goes up and you get stopped out. So I prefer it on daily time frames or higher. Lower time frames, I don't think they're as useful. They do have a time and place, but I believe it's better to stick to price action and support and resistance zones, and then looking for divergences within those support and resistance zones. Hopefully that makes sense. Okay, so let's go to a little bit lower time frame, say an 8 hour, a 8 hour and a 4 hour chart. See with the 4 hour and 8-9 came in. We hit the midpoint of my channel, and also we tagged right here this big resistance zone. We went through it, stopped anyone out that had longs, and then reversed. It's almost textbook price action. You can see on an 8 hour we had an 8 come in and we reversed on that. I usually like to, let's look at a 4 hour. Let's check to see what is going on with RSI. You can see price is breaking up. I'm going to get rid of some of these. Price is actually breaking up from my downtrend line. I'm surprised at how much it pushed higher. So what I would do next is I would look at something like a 1 hour, and I would use this trend line and see when we finally reverse. Like right now, it's just embedded. Stochastic RSI is embedded up here. RSI is embedded. So I'm going to create an alert on the trend line, RSI alert, crossing once per bar. And once I start getting alerts that RSI is starting to cross down, that's when I know I can start looking for potential short opportunities. Even now I could do something like this, right, with my fibs. And I can start looking for short opportunities once we get up here to 61.8 area and even a little bit higher. That's where I can look for divergence, start up here, and then get short. I want to see what happens this Friday, though. Price might just be held here. And then come Monday. So this is what I'm thinking might happen. We might push up a little bit higher. And then come Friday, we'll push up here to this area. And we'll just stay in this range all of Friday. And then come Monday, we'll get one more push up to here, 4150 area. And then we roll over hard. That's what I'm looking at. I think RSI will do something like this. It will do like this until next week. We'll get one more push up, and then it will break down. And you'll actually break down from here, which is your second line you would draw, right? So you would break down through here, probably do something like this, and then break down. Obviously, I'm not mirroring this. The time frame is not exact. Here's the start of Monday here. So keep in mind, this is Friday, and then this is Monday. And this might even happen go into Tuesday. We'll just say like this is next week. This is until Friday. And again, why do I think that? This is going to happen, and that's because of the options expiry. Maximum profits for market makers. Okay, that's the SPX. Any questions, guys? Any confusion? That's just over the next few days. To really say something over the next few months, I want to see how this weekly develops. I'm looking for a breakdown. It looks like it's emming out, but we need to see how this develops going into next week. I don't want to give any potential long-term targets, but here are my support and my support zones. 3,500 and 3,300 are major. 3,300 is a major support zone. If we ever get down here, we'll talk about it then. That's when we just look for divergences to turn around. Yeah, I mean, Andre, that's what could happen is we go into May and we start dumping. We have this huge dump like this, right? And then by the time we're down here, you know, maybe this is the summer area. Okay, the dump actually needs to happen faster. Maybe we do this, right? May, June, right? July, okay. And then we're in this area, and this is where we sit in summer. We do this in the summer until, you know, we get into the fall, and then maybe we turn around in the fall. Because the election is coming up, so that's when they need to start reversing it. Do you recommend MACD divergences for lower? I mean, you can use MACD. You can use any. They all work. They work, but I'm just telling you that the lower the time frame, the less likely they are to work consistently. And I recommend, again, using support and resistance first. You use support and resistance. You find location, and then you start to look for structure markets. I mean, the TRI teaches, you know, three things: structure, price structure. Well, first location, second price structure, and that means like candlestick pattern structure, and then third momentum, which is things like RSI, MACD, stochastic RSI. All these different indicators are momentum indicators. Hopefully that makes sense. That's how you frame a trade. That's what we teach to create a trading plan at TRI. That's the very, very, very basic explanation. Okay, so that's the S&P, and those are my thoughts for what's going to happen tomorrow and going into next week. Let's see what happens, and then we'll review it next Thursday. Let's look at the US dollar really fast. You can see on a daily chart, it's reversing. See on the other side of my downtrend line, it looks like it's trying to create a W in RSI. If we can get this RSI to break above here, we get a nice W and move higher. Where could price potentially go? We can look at chaos, see that we ranged. Here's the high of the range. Here's the low of the range. And chaos tells us we'd go to 105, which is actually ironic that it's the level, because we have my huge, right? This is my huge parallel channel. And that would be the midpoint of my parallel channel, this 105.2 area. So if we move up from here, we would hit right that resistance zone. And then we'll reevaluate when we get there. But that's what it looks like for the DXY, which spells downside for things like gold, which I will talk about in the after party. But I know a lot of people that watch are interested in crypto. So we're going to look at Bitcoin, and then maybe we'll look at the total as well. I'm debating if I look at, I'm going to look at the total first because I do think it gives a better signal. And then we'll look at Bitcoin because I know people like the Bitcoin, the ease to understand the price levels of Bitcoin versus, say, the total market. Okay, so we're tagging actually. So this is a fib of the entire range of the total crypto market. And we're tagging this 61.8 level. We tagged 78.6. We reversed from there. I expected us to go to the 88.6 level. Okay, usually price goes to the 88.6 level. It didn't. We're just ping-ponging and ranging between these two fib levels, so 78.6 and 61.8. I could also reverse it, and then I could say this is the 38.2. If you look at this, watch me. I can reverse it here, reverse. So now this is the 38.2, which is traditionally a huge resistance level. So if we're bullish, then we would say, okay, price is going to move up here, and then this is the area we'd start selling. But since I am just using this as levels, I want to reverse it and keep it the other way. All right, so this is a weekly chart. Let's look at a 3-day here of the weekly chart. Actually, let me go back to a weekly. You can see on the weekly, interestingly, price is actually starting to break down on the weekly. This was a big reversal candle right here. Really big deal what happened last week. If we go to a monthly, this monthly does not look good. Like if we close the monthly down here, where's my like little patterns? I think I saw they have patterns on here somewhere. Where are they? Patterns. They have chart patterns. Bar patterns. No, that's not what I want. Maybe next time I'll do it because I forget where they are, but I saw them the other day and I was like, oh, this would be great to use in the presentation, but now I can't find it. Oh, that's so annoying. Sorry, guys. Okay, whatever. I can't find it. Anyway, this was quite a bearish reversal here on the monthly chart. We've got 3 days for the close. If it closes like this, that is not a bullish close at all. It's extremely bearish. You can see the last time we had a candle similar to this was at the top in November 2021, right? That was your last bearish monthly candle close. You also had candles like this up here, right? These are reversal signals, and you had a pullback. Also here, major reversal candle, right? So oftentimes you do get these sort of candles before the price tops out. So what we could get, since we're basically just ranging in crypto, right? Everybody's in agreement. Nothing's probably going to happen until 2024. I would like to see a huge pullback, a washout, and even a pullback down to these lows to really scare everyone. Before then, we have that final rally in crypto. I'd like to see something like that. I don't see the big bull market yet that a lot of people are expecting. Let's go to a little bit lower time frame. So you can see the 3-day broke down. Go to a daily chart. Here's your daily. Let me adjust RSI. All right, so it's really sloppy, honestly. It's not a great looking chart. Like I would draw this like this, and then here was your breakdown. You can see how quickly it happens. 12-hour is a better one, actually. Here's your breakdown, and then we draw it the other way. And here's kind of your reversal that hasn't even confirmed completely yet. If we push above this, then we can get a bullish move higher, but right now you're running into some serious resistance, and this could turn into an M. And we get a reversal here, and we move lower. So just keep that in mind. That, sorry. Yeah, seems like audio capture is still working. Patterns are in indicators, technicals. All right, let's see. Indicators, technicals. Yes. I will. Oh, patterns. Nice. Okay. Shooting star. Oh, that didn't work. Okay, I'll experiment with putting the patterns on the chart later, and then I can show you next week. And that'll be cool to walk you guys through a few things. All right, so look at this 4-hour. Okay, thank you. Thank you, Chris. Chris is reminding me we're coming up on 30 minutes. Here's a 1 hour chart. You can see price is starting to break down. I don't like what I'm seeing here. You see this one candle right here? They grab the liquidity up here. This is the liquidity grab. And now they're getting ready to reverse to the downside. Potential movement to the downside could look like this. This is potential target, right? So an ABCD move right down here, right down to this level. Take out all the liquidity. That's a simple ABCD move. Why don't I look at Bitcoin so you guys have some concrete price targets, because I understand total is a little bit confusing. 2-week chart is oh, okay, let's look at that. Let's go to a monthly of Bitcoin first. All right, doesn't look, not enough data there. Let's go to a 2-week. Yeah, 8 and 9 on a 2-week. Let me hide some of this. I hate how these show up on these higher time frames. Okay. Yeah, so we're also going to hide this. Okay. Yeah, so a 9 is printing on Bitcoin on the 2-week chart. That's not good. You can see stochastic RSI is firmly embedded bullishly. Price, last time this happened, price did not roll over until this rolled over first. Same thing kind of here, but you can see the last time we printed, let me make this full screen for you guys and let me hide this. You don't need to see that. You don't need to see this. Let's clean up this chart. You don't need to see this. Okay, let's get rid of this. And let's save it so that those don't come back. But I do have my RSI levels that I want to keep just to show that we're in these ranges here, there, and right here. Yep. Okay, perfect. So 61.8, 78.6 levels. 50% at 34. So you can see every time a 2-week 7, 8, and 9 has come in, except for back in 2019. It seems like they didn't apply much in 2019, but 2019 stopped the market, rolled over. 2020 stopped the market, rolled over. It did continue to rally in the 2021. Let's see where RSI was when each of these were happening. So RSI was extremely bullish back then. We have more of a 7, 8, and 9 similar to 2020 and to 2019 rather than this crazy blow off top period. And then also here you can see it's also just a little bit higher, but still in that like almost normal realm. While, you know, I'm just looking at stochastic. Yeah, so most of the time this 7, 8, and 9 does confirm at least a pause, but if not a reversal. So it's a big deal and something that I don't think should be ignored. A pullback actually would be healthy for the bull case from this area. Let's look at a weekly chart. Yeah, weekly is starting to look kind of weak. 3-day chart. Yeah, 3-day, look at this. So let's do a weekly first. I'm going to get rid of some of this stuff. Visibility, I don't want it. The weekly time frame, I don't even want it on a daily. I'm also going to get rid of this. And I'm going to get rid of this. Yeah, so you can see this weekly chart, right? If I draw my RSI, we've actually broken down pretty almost. We're struggling with this level. Let's go a little bit lower to a daily. And let's see if Bitcoin is following my prediction. So here is my, I don't know why this line got messed up a bit, but this was basically the kind of prediction here. Something along these lines. And then a push higher. I don't think I expected us to push this high to 29,000. I expected to push up to 28 and then a rollover. We pushed all the way to 30,000 to grab liquidity. And now it looks like we may start to roll over and reverse. So if I do something like this, right? Price is at a critical level here. So if daily pushes higher, that's a bull signal for me. But if we can pull back from here, we're still kind of in a bear. Yeah, squiggly line theory for the win. So this is my squiggly line. I was a little bit too bearish, I think, with this part of the line, thinking we'd stop at this 28,500. but it looks like they really wanted to take the liquidity. If we use our fibs, actually, you can see, okay, where did it price go to? Did it go to the 61.8 level? Yeah, so it tagged 61.8. And if I pull it back, yeah, 61.8 was tagged, and they almost tagged 78.6. If I use the main price levels rather than the outlier wick and tail, they actually tagged 78.6, 78.6, 88.6 zone, which is where I like to put shorts. They reversed completely there and then reversed back. So big liquidity grab. 4-hour chart. So right now on a 4-hour chart, I have this alert set and I'm waiting for RSI to break down. Once I get an alert that RSI is breaking down, that's when I can start hunting shorts. And I'll consider shorts to the downside. And the question is, where do I think we're going to go to the downside? Let me delete a bunch of this. This is the big level, right? 2,500. And I think that's actually where chaos points to. Yeah, 2470, 24,700. That's your big level. And that's where you can expect the market to play for a while and run into some serious resistance, well, support, I should say, before we can see any other further moves, and we'd have to evaluate from there. But that's what I'm seeing for Bitcoin. I'm not seeing that there is going to be a huge rally to the upside. We keep getting lower RSI levels compared to price. RSI keeps making lower lows while price is kind of stagnant. That's never a bullish sign. So that's what I'm seeing. I know it's probably not what a lot of people want to hear. People want to hear like moon. Okay, we're going to go to 50, 60K. But considering the state of the stock market, I just don't see it. I don't see this huge move. The most I could see is a move to 3,400. Take out all the liquidity, they just push up, take out all the liquidity here and from here, play in here, and then roll over. That's the only thing I could possibly see happen. Otherwise, we're going to roll over from here and we'll go to this level first and then play in that level before potentially moving lower. That's my viewpoint on Bitcoin. I would be careful if you're long right now. I'm not. I've been out. TRI has been out of longs since here. And I talked about that in my Discord room about TRI exiting all of our positions. I didn't enter on this up move, although there was a signal, ironically. This reversal signal came in here, which was Monday for me at basically in the morning on Monday. And ironically, I swiped the notification away on my phone and I didn't check the market for the whole day Monday. And then by the time price started to take off, it was Tuesday, price already took off to 28K and it was too late for me to get in on the trade. But I did get a notification and I could have been long, but I wasn't, simply because I swiped my notification away on my phone. So be careful with those notifications. You don't want to make the same mistake as me. Okay. I think we've been going for about 37 minutes. It's a bit long, but I wanted to get that Bitcoin explanation in and why I do what I do. If I get an alert, I will definitely be updating people in my signal room on Discord. So keep your eye on that room and watch for my short signals. Same with S&P. Keep notifications on for that room. I also post in the regular member chat sometimes and check out my signal room to see what I'm doing. Yeah, that's about all I've got for Bitcoin and SPX. We're going to jump over to, thank you guys for watching. We're going to jump over to the after party. And in the after party, every TRI member gets to ask about anything you want to ask about related to crypto and stocks. Not anything else. Just related to crypto and stocks, not everything. Oh, by the way, school emails were sent out today. The school is now open for signups. So if you've been waiting to get into the school, it's open now. Highly recommend taking level 1 if you haven't. It's extremely valuable for showing you how to develop a trading plan and set the base for developing set a core base for developing good trading skills. So definitely check it out. It's open for, I think, the next Our next term starts on the 8th, right here, May 8th. So you've got about 10 days or so to join. So just consider checking it out. All right, that's my spiel on the school. Hope you guys have a great week. If you're part of TRI already, thank you so much, and I will see you in the after party. All right, bye guys.